All eyes are on Jerome Powell as the Fed prepares to make one of its historic decisions, probably the most critical decision thus far this year, or even in the last couple years, one might argue. Will he deliver the final awaited rate cut that the market has been steaming for, or is he going to disappoint with a hawkish tone, saying that tariffs are here to create inflation, and thus we're going to hold rates for a little bit longer, higher for longer, as one would say? Or is it going to be a transition or transitory narrative of some kind that will be thrown out there? Let's dive in exactly what is going to be going on with the Fed tomorrow as the FOMC has kicked off officially today. The markets the previous day were not looking as hot as they were on Friday after having a massive move, kind of coming down a little bit. We really didn't break any single structure throughout the day. We also gave you guys all the levels that we need to pay attention to in this video in our weekend dive deep video, 14-minute video approximately, link in the description below, and it will be at the end of this video if you guys want to go check that one out. And as always, if you guys wouldn't mind subscribing to an amazing channel that gives you out free news and analysis every single day, along with talking about fundamentals and technicals on an alternating basis. So you don't really get that from a lot of other channels. Usually they're in one camp or another, and we also give you a good laugh along the way. So without further ado, let's talk about the S&P. Post-market, we were down a little bit on the red. Major indexes down overall on the day. But looking at how we finished on Monday wasn't necessarily the worst a day. We also are going to get a couple earnings in post-market when you guys are seeing this. Supermicro, which is going to be a big one, along with AMD and Rivian. We will be talking about that most likely. AMD is arguably one of the more important ones in the series. SMCI definitely going to be even more important than AMD because it will set the bullish or the true fervency bullish tone. But we got to talk about a couple things. What are the current expectations for the Fed and where is the market positioning itself? Well, we have a couple gaps on the chart that are establishing themselves in this region right here around the 50-day moving average. I would be looking to be a buyer above 555. Because that is also where the previous week breakout was around 550. It gives us a little bit of room and hesitation room, as I like to call it, going into the Fed. Now, subsequently, if we're below that significantly, I would reevaluate my decision. Also, we can talk about the NASDAQ and give you guys a similar story. Looking for the NASDAQ to kind of coincide around that 473 level, which is going to be the previous weekly breakout, along with the 50-day moving average, which we want to basically retest and hold. That's going to be the two key things that we're going to want to see in that. The Russell actually showing it's holding above its 200 weekly moving average, holding above the 50 for 2 consecutive days. So that's good. Retesting it today. That kind of indicates that early sign of what the markets are going to be doing. I'd be looking for the S&P and the NASDAQ to show that retest versus the Russell actually holding. We can also turn to the most riskiest on asset, Bitcoin, just going sideways in this region right here. Not really doing much. We saw this from Bitcoin that it has this tendency to kind of go sideways, maybe even peter down a little bit down to, let's say, 89, 90,000 psychological number, and then rip up higher to approximately 125 is where we're expecting it to go. As you saw with the last expectation, I was like, it'll hit 100 in maybe 2 quarters, and 2 weeks later, 100. So it could be one of those. I say it's going to be next week, and it'll take 2 quarters this time. Who the hell knows? Anyway, but I do truly believe Bitcoin is heading higher. We can also look at the VIX to see that it's calmed down a little bit. Everyone is still on edge, right? We got news about the trade war as well, where basically deals are happening, but we're not there yet. Also, the deal with Canada is going to be complex and take time. So that leads me to believe that we may be in this fearful territory for a little bit. And also, let's jump over to the fear and greed index. This on Monday closed exactly where we wanted it to be, which is sitting right dab in greed. Now, going into the FOMC, cranking all the way from 42 to 57 as the markets are red, this means that there is broader strength in the market. We can also turn to RSP to kind of get a better indication of what is going on. RSP, again, holding similar how the Russell held, 50-day intact. This is where we want to see the strength come in. We're really not getting that much chop in it, so that leads me to believe that we're stabilizing, going sideways, and preparing for Mr. Powell to come out and give us maybe even a rate cut out there, right? So there's three scenarios as I see it. Rate cut, which is basically the extreme bullish scenario. At that point, kiss every short goodbye. We covered this also in the weekend deep dive, that the net speculative positions at 78,000 positions are the bearer fuel that if this scenario happens would ignite us, basically kiss the 200 goodbye, because that is going straight through. We're going to pile straight through 590. I would estimate an easy 5% move in the stock market just off that scenario, right? So we're targeting 590, basically knocking on all-time highs door, and we would just rally, rally, and rally. There would be no stopping, because the markets would basically be like, hey, he's not saying that we're going to get this inflationary bout. He could also come out and basically be data dependent and say the data came in what we wanted to. If it continues, you'll get more rate cuts, or we can then pause at the next meeting. That would be like the true bullish scenario in the markets. And remember, the carry trade is looking like it is just spicy and spicy and spicy for the week right now. We're looking at a massive move today where it closed significantly higher. This will obviously offset some of the liquidity that is in the bond market and be forcing people to sell things they can, which are stocks. And maybe that is why we had a red day yesterday. But going back to the S&P and the Fed, right, this is where we're expecting our no rate cut right now. That is scenario 2. So right now we hold rates, but we hint at future rate cuts, right? We kind of say in June, that's more likely. Maybe we were ready to cut rates in May, but we want to see more data. That could also strike a very bullish tone in the market, maybe lean or how it's interpreted by the market. But then again, remember, Jerome Powell is going to come out with questions tomorrow, and that is really where you could get that gotcha moment, especially from the Bloomberg guy. That guy has been on fire, or Tim Rose from the Wall Street Journal. Those two are the big kahunas to watch in the questioning for Mr. Powell. And also the other thing that we want to see in the other scenarios is going to be a hawkish tone. That is probably the one thing we don't want to see, actually, and that will basically disappoint markets, send us lower, more fearful territory, or we may even stay in a neutral posture, waiting for some more clear guidance as CPI is next week. Again, we don't have a lot of news catalysts between now and next week. We do have some ISM that came out on Monday. Today we had Atlanta Fed GDP, but that is becoming the ADP GDP at this point. And then Wednesday, we're going to have the FOMC. So far none, after the FOMC is done, we could also see initial jobless claims move us a little bit, but not really much. Again, Atlanta Fed GDP. We're also going to get a bunch of Fed speakers coming out. They will maybe strike up a tone that could be the opposite of what Powell says. We have seen this historically, where Powell will give one set of a tone and then he'll let the other members basically kind of pull back on it, or vice versa, in order to equal out the market expectations, to kind of not symptomize, but basically mold how the market is thinking to his will. That's what Powell is basically known for extensively. I would argue that the market is positioned in a very excellent opportunity to rally, and I will also look to crude, which established nearly a new lower low as energy prices are getting cheaper and cheaper. This is going to be very hard for Jerome Powell to come out and basically say that inflation is not coming down and that there's no projection in the future for rates to come down. That would lead to an extreme case, in my opinion, where we see the unanchoring of inflation expectations. If this man comes out and gives us a calm, cool, collected speech, we definitely would result in more bullishness in the market. And that is why I really think there is an inkling for this more bullish scenario, even though all the politics of the situation may as it be, the data is pointing to a very liberal decision for the Fed to come out and cut rates, leaning more towards that dovish tone, and I truly believe that. Some of the big opportunities on deck definitely going to be like Meta, holding around that 50-day moving average. It is primed right now, primed for a massive push up. We also saw Amazon, right, kind of collapsing below its 50-day moving average, holding around that 9-day and staying in that weekly rotationary level. So definitely going to be looking to pick up Amazon through the week. We also talked about Apple in the weekend deep dive, and subsequently it is breaking down. We asked, is Apple the next Intel? And it looks like it may actually be. Apple may be starting to break down further. as companies basically deleverage more and more from Apple because they just don't want the tariff or the lack of innovation exposure. So throw in the comment section below what you guys think of Apple. Do you think it's the next Intel or not? And check out the latest 2 videos we have over here. We have the Weekend Deep Dive linked as well as our debate. So make sure you guys check that out. And for more content, join the Discord as well, where we kind of banter with you on there as well. Thank you all so much for watching, and I hope to see you in the next one.